industry's most geographically diversified gold operators. We are the largest in Africa and the third largest in the world, with about 3/4 of our production coming from our international operations outside of South Africa, and 1 in 4 ounces coming here from our mines in South Africa. We operate the full spectrum of gold mine types, from open pits to underground mechanized operations, and of course, the ultra deep level underground mines in South Africa where the company was first founded. From a metallurgical standpoint, we process the full range of ore types, from free milling to highly refractory. The operations range from low-grade, high-volume assets to high-grade, low-volume. No mine is the same. They all have unique characteristics, and we have the expertise to operate them. That's a unique strength we have in terms of retaining our core talent. There's enough learning experience from within the company. During the first 9 months of 2016, based on strong cash flow from our international operations, we saw our free cash flow jump to $239 million from the same period in 2015, when we were about $19 million in the hole. The overarching strategy of the company that drives our business performance has been consistent since 2013. It's also important to note that our strategy is underpinned by a strong set of ethics and values that really form the DNA of our organization. In every decision we make, we consider the 5 key elements of our business objectives and how that can support the central goal of delivering sustainable, emphasize the word sustainable, improvements to cash flow and returns. In the interest of time, I'll only dig in to certain key progress areas which we have delivered against our strategy, notably our brownfields and advanced greenfields opportunities that we are working actively through to deliver quality production that will add to margins, extend mine lives, and also shape the portfolio in the longer term for our business. A critical thing that differentiates us now as compared to 3 years ago is our ability to withstand shocks in the gold price. And in the event of a rising gold price, bring a number of smaller capital, quicker payback options into play on a very disciplined basis, whilst keeping a close eye on our free cash flow margin and returns. These options, as I said, already exist in our portfolio and remain our preference relative to M&A in the short to medium term. Turning to safety. This is our highest priority in the business. It underpins everything we do, and it's an area where we will work to continue to improve on the good work we have done to date. Our improvements of the past decade, which I'll show in a second, are a result on one hand of focus on improved systems and technologies, some of which are outlined on this slide here before you. These are advances that we, as part of industry-led initiatives, have helped spearhead and roll out across our operations. The results are encouraging, but we do realize that there's a lot more to do. But technology alone is insufficient. Like any heavy industry, especially in a company like ours that employs over 50,000 people globally, human error remains our greatest challenge. This is an aspect of the business we continue to work hard to mitigate in cooperation with a broad group of stakeholders. Also, we work continually to ensure that every person in Anglo Gold Ashanti places a greater focus on identifying and avoiding risk. In an environment where even the minor misstep can have catastrophic consequences, it is critical that we are not only relentless in identifying and eliminating these hazards, but we instill a culture across the organization that prices safety above anything else. We have made encouraging strides in this regard, but we will continue to look at ways where we can constantly improve. The net result of this work undertaken by every member of the Anglo Gold Ashanti team, from the corporate to the stope into the smelt house, is the sharp reduction in the fatalities and the injuries across our operations. And this has been achieved over the last decade. This is not a slide we use to pat ourselves on the back. but rather one to reinforce the urgency of the fact that remains much more for us still to do. Our focus continues to remain on improving margins across the business, despite the recent currency headwinds and lower grades that we have seen at some of our operations. In looking at the space between the yellow cost bars and the orange gold price line, you can clearly see that this is a company that is committed to improving efficiencies and widening margins regardless of the lower metal price. We'll continue to look at ways of widening those margins by getting back to basics in some places, through our Operations Excellence program, which looks to innovative ways to improve efficiencies across our operations, but was also keeping the long-term prospects of the business intact. And by targeted investments to improve the portfolio mix, which I'll talk to a bit more detail in a moment. One of the most notable successes in the past 3 years has been the reconstruction of our balance sheet through entirely self-help measures. It's been an interesting journey for us, and also a way of doing business that prices careful capital allocation, self-sufficiency, and cultivation of good growth opportunities from within the business. In the global gold industry, we remain one of the only 2 majors that have not issued any equity since 2010. As many of you will know, it's an exclusive club that is not easy to belong to, especially if you are a large company, but one we are proud to be in as a member for over 6 years nevertheless. As you can see, the net debt levels in the group fell by over a third, partly due to the sale of one of our assets in the United States, but as well as the focus on improving our operating performance and strong cost management, which has helped generate the additional free cash flow that is needed. Our CFO, Christine Ramon, and her finance team have done a splendid job in moving decisively to bullet our highest cost debt, creating not only an additional cash flow of over $105 million a year, but also creating the flexibility that we need. We have now deleveraged to a point where we feel comfortable, but emphasize not complacent, and the market feels comfortable as well. Going forward, we expect our positive cash flow momentum to continue benefiting from these efficiency improvements, as well as leverage to gold price, currencies, and oil prices. Now let's look at some of our efforts currently underway to unlock value from our current portfolio. Quite clearly, the industry is coming to a point where companies either need to reinvest in the business, or as we have seen increasingly, turn to M&A to shore up and improve their portfolios. We are firmly in the reinvestment camp, with a pipeline of very good, high-return brownfields opportunities that will improve our production mix in the medium to the long term. We also continue to look for ways, as we did recently with our Tropicana mine in Australia, to unlock value by making fundamental but lasting improvements through innovation rather than a large checkbook involving large capital investment. To be clear, our primary objective is not production growth for its own sake, but rather on margin enhancement. As we often say, if someone gives us 2 balls to choose from, one showing production growth and the other showing margin improvements, both sustainable over the long term, we'll go for the margin improvement option. We have strategically positioned AGA to achieve sustainable cash flow, giving us the balance sheet flexibility to make decisions around our future investments. We carefully consider every dollar we invest and ensure that our capital is rigorously allocated to the highest return options that have been appropriately handicapped for project and country risk. We target returns in the mid-teens for these investments. Our disciplined approach to planning has assisted us in making proper investment decisions across our portfolio. In general, our all-in costs remain well below the current reserve price, leaving a significant cushion when compared with the industry's 3-year average gold price, and not to mention the current spot price. It's unlikely we will rush to change the reserve price line regardless of how well the gold price does in the interim. This slide is quite an important takeaway, and we'd spend a little bit of time here. As we move into 2017, as we have flagged over the last 3 to 4 months, we have decided to make some key investments in improving the portfolio, where we believe we can deliver the best value to our stakeholders. We have 2 flagship projects at Siguri in Guinea and Sadiola in Mali, which will see new processing capacity open up, the opportunity to process different ore types, notably sulfides. These will see production increases, but importantly, life of mine extensions. I must point out that the Sadiola project, with our joint venture partner Anglo, indicated by the dotted line here, remains subject to reaching agreement with the governmental authorities in Mali. The yellow box shows increases in sustaining capital that will help us access new ore bodies, as in the case of Idioprim in Ghana, or improve flexibility, as in the case of our Cuiabá mine in Brazil. Both Geita and Kibali are in the early phases of ramping up production from underground mining, and that doesn't come for free. So we are investing now in opening up access to those ore bodies. At Sunrise Dam in Australia, we are putting money to work on improving our recoveries from the plant, and at Tropicana, as we said in the December announcement, we've really spent a small amount of nominal capital in 2016 that will give us the improved volumes and costs going forward. So, what do these projects all have in common? They are entirely self-funded, they have high returns, they are in jurisdictions which we know and like, and they offer nice, quick payback rather than protracted payback time to a volatile cycle. So to conclude, we have a long life portfolio that we continue to sweat for the best, highest return options, and we are fully geared to the gold price. We are a transparent management team that doesn't shy away from making tough decisions. We have proven that we can deliver in any market environment, whether the price is high or low, importantly without turning to shareholders and asking them to foot any bill. We are focused on the right things: safety, sustainability, margins and returns over growth for its own sake. That is our true north, and we won't deviate from it. We have a strategy that is suited to any market, even one as volatile as the current gold and foreign exchange markets. This strategy has helped us deliver a much improved balance sheet, and we believe that is fit for our purpose and gives us the flexibility that we need. And importantly, we have a stakeholder engagement model that has served us well, although it's one that we will continue to look for new ways to improve and develop upon. That in a nutshell is the Anglo Gold Ashanti story, ladies and gentlemen. Thank you for giving us the chance.